All right. Hello, everybody. For those of you that don't know, which actually this is my private Facebook group, I make sure this time so everybody should know who I am. But just for GP, I guess my name is Stacy Daniel, and I'm a personal finance coach and a life insurance agent. The name of my company is Motivational. Financial motivation. Sorry. I had a hard time trying to decide between my one-liner and the company name. So the name of the group is Motivating Your Money, but the name of my company is Financial Motivations. Okay, so as promised, on the little ad that I posted, that today I'm going to talk about life insurance. It is September, and that is Life Insurance Awareness Month. And I've looked at the video a couple different times last time, and I realized that I wasn't interacting with people, and it says I want to know. Okay, so I wasn't interacting with people, and everyone was speaking to me or asking questions, and I it said broadcast interrupted. Either way, I'm going to continue. So ask questions, say hey, send me hearts or a thumbs up or anything like that, or if you need me to repeat something, and I will, because I'm looking at my screen. All right, so let's see here. So as I promised, I'm going to answer 4 questions. One is, what types of life insurance are available? How does life insurance work? And when is a good time to buy life insurance? As well as, how much life insurance do you need? All right, so what type of life insurance are available? There's 2 main types, and that is whole life, and then, which is permanent, and then there's term, and there's different types of each. Today I'm going to focus primarily on term life insurance, and then next week, stay tuned on the 14th at 7:30. And again, I apologize for coming on a little bit late. I had some technical difficulties, but I think I'm getting the hang of this. So today will be term, next week will be whole life, and there's lots of different kinds of both. Today we'll go into details on the term. Let's see here. So as far as term is concerned, there's some general uses, or should I say some common uses for term, which most common people don't even know or don't even take advantage of. It's more or less on a business perspective. For example, key employee. That means the primary person that generates most of your income with all of their education, their experience, their selling ability, their relationships, things of that nature. They're considered the key person. They're the breadwinner pretty much of the company. And you can have an insurance policy on that person, meaning if something unexpected was to happen to that person and they were to die due to old age or accident, things of that nature, anything other than committing suicide, unless it's after 2 years of the policy. But anyway, those are details. Then you can have them covered, so therefore your business can still continue to thrive until you're able to find someone else that meets or exceeds those qualities, and you could put in that place. It would be a really sad situation if somebody was to die and they were the key employee, and then all of a sudden now you have no way of generating income. So key employee is one of the main reasons a lot of companies get term insurance. Another one is for mortgage protection. Mortgage protection insurance for term means, you have a 30-year mortgage, you might have a 20-year mortgage, you might have a 15-year mortgage. Well, you know that this large amount of money for this home is going to need to be paid regardless if you live or die. If you're married or have a family, should I say. And a lot of people don't realize that debts do transfer to your relatives once you pass on. So having a policy in place to make sure that debt is still able to be covered in the event of your untimely death is a benefit of having a term, and it's a benefit for your family as well, so they don't have to worry about. That's one less thing during the time of mourning that they have to worry about by going ahead and you taking care of a term policy. Let's see here, a buy-sell agreement. That means, say 2 or more people decide to go into business together and they have a partnership or a collaboration. And with this partnership or collaboration, if one person were to die, then their share of the company can actually go to their family if they have a beneficiary set up. Or, if you have this policy, then you have the right, with the proceeds, the life insurance death benefit, you have the ability to purchase their share. So now you will be the sole owner of the business, and you won't have to worry about the business going to the the beneficiaries or whoever it is that they designate to take their share upon death. It's an agreement, and usually when there's a buy-sell agreement, both partners or however many is involved in an association or a corporation, they have policies on each other. Let's see here. The last one, I guess, a most common use for term insurance is when you only have like moderate income. You do want to be covered, but you just can't afford a whole life policy. And a whole life policy does cost more because it's like, let me see. I heard somebody give an example. I don't remember who, but it wasn't mine. So this is not mine, but I really enjoyed the example, and I thought it drove home the point very well that temporary policy is like if you rent. You can rent a place for 30 years, and at the end of 30 years, you don't own the home, you don't own the land. If you decide to stop paying, then they can give you, say, a 5, 10-day, 30-day notice, and you have to go. Even though you've paid all your money all that time, that is not yours, and you have to vacate the premises. Like a whole life policy, it's like if you had a mortgage. There are different types of whole life premium riders, meaning if you can't pay it but you have monies built up, then they can use that money towards your premium due to disability or loss of income or different there are a lot of different riders that you can have, but you have invested in this insurance policy, so you have money built up and different benefits come along with paying that extra premium each month. With term policy, however, when it's over, it's over. You don't get any money back. You're no longer insured. And just like I said, if you rent for 30 days, if you stop paying, those people will expect you to vacate their premises. So now I want to talk about some pros and some cons when it comes to term policy, because there are both. As of course with any investment, there are both pros and cons. The pros is for term insurance, it's definitely cheaper. You can get $1 million insurance, $500,000 worth of term insurance for like $50 a month, and you can cover you and your entire family. They have different riders for spouses and children. Though it is only for a certain amount of time, you all can be covered, and you can have protection for burial or protection for your mortgage or whatever it is you have that term policy for. But you don't have to wait till you're making a substantial amount of money to get a whole life policy. You can still have term, and you guys can still be protected. Therefore, you're not a burden on your loved ones when you do pass on, because that's one thing we're guaranteed to do is die and have to pay taxes. So help them out and have some type of policy, and term is a easy solution. Let's see here. Another benefit of having a term policy is, say you have a large loan, say a business loan or something of that nature. You want to make sure that you protect that loan. So again, those debts don't transfer to your children or your spouse upon your untimely death. So you can get you a cheap little term policy and protect them, protect your investment, and then once that loan period has expired, then you don't need that term policy anymore. That's another business use. A lot of business owners use term policies for. So let's see. The last one is that you can have a lot of coverage, like I said, for a little bit to nothing. I ain't gonna say nothing, but to a little to moderate amount of premium payments. But if you can convert it to whole life later, when you expect your income to increase, then you're insured now and you're insured later. And converting means I converted it to a whole life policy. So I'm 20-something years old. I need some insurance, but I can't afford a whole life policy, and I like the benefits of it. Let me get this term. Let me ask my insurance agent, can I eventually convert this term policy to a whole life policy when my income increases and take advantage of all those benefits? That's a great option. The thing is, if you don't ask for convertibility on your term policy, then you'll have insurance for a certain amount of time and you'll pay a low premium. But then, say you have a 30-year term. After 30 years, you're no longer insured. You're no longer insured. Now you want to try to get you an insurance policy, and insurance gets more expensive every year that you get older. Also, in 30 years or 20 years or even 10 years, if that's the amount of term insurance that you have, then you could do health concerns. And that can drive the insurance premium as well. So Getting a term policy now with convertibility option saves you from that. Because when it's time to convert over, then you don't have to prove insurability. You won't have to take a paramed exam. They won't question your medication that you're currently taking. Have you recently had a heart attack or stroke? Do you smoke, and what's your weight? You know, things of that nature. You won't have to worry about all of that. So that's a get small amount now, pay a little bit now, but I still have the right to convert to something bigger. It's kind of like renting to own. Yes, kind of like renting to own. So now the cons of purchasing a term policy is, like I said, it run out. Now, if you buy a 30-year term and in 30 years you're still alive, that's good news and bad news. I'm still alive. I did not die in 30 years. I have still more life to live and to enjoy my kids or my grandkids, or just the quality of life that I've built for myself. However, as I just mentioned, the bad thing about that is you're still alive. You no longer have insurance, and though you haven't died in the past 30 years, you are guaranteed to leave this earth. So now, in order to prevent your loved ones, your children, your significant other from having to pay for your burial and take on your debt when you die, you do need to get an insurance policy. So now you're older, 30 years older, probably taking some medication, probably have had some surgery, some hospitalization, and some health concerns. And maybe, you know, most older people, when they get older, they gain weight. So maybe you're outside of that. They put you on a scale, what they ideally speaking, in order to get a preferred rate, which is, you know, we think you're going to have a long, healthy life, and you can pay a small amount of insurance. You're a lower risk is what they consider it. You're probably outside of that lower risk and in standard risk, and that's going to increase your premium monthly. So those are the cons of insurance. Like I said, you can get a term with different varies of riders, and one of them is a return of premium. So with the house analogy that I use, imagine if you could rent a home, and you're not renting to buy, so it's not convertible, but you're renting, and you're agreeing to paying more, so that when I finish renting, however long that is, I want you to give me all my monthly rent back, so that I could go and live somewhere else or do whatever else I want, do with it. That's called return of premium. My suggestion, if you're going to get a term and you're not getting a convertible, which means eventually I can convert this, rent to own my home. Eventually I can convert it to a whole life policy and receive all the benefits of a whole life policy. Then at least I like to get all my money back once the time period is over. 30 years, 20 years, 5 years, term policy. Then you have all this lump money. Again, like I said, you're agreeing to pay significantly more for that feature, but at least at the end, you do get all your money back, and so you can invest it or buy you a whole life policy at that point, or whatever you choose. You haven't really lost anything. So let's see here. I'm trying to not talk too fast. I feel like I am talking too fast. I don't know if there are any questions. Let's see. I don't know how to do the questions thing. I'm going to get better at this, I promise. So, let's see here. So, I have some tips for you. If you decide to, or actually whenever you get insurance, whether you decide to go term or whole life, and like I said, I will be discussing in more detail, kind of similar to this, and actually a little more in depth, because there's so much more to whole life policies, or permanent policies than it is with term. But some of the tips I like to give you when you go to your insurance agent, whether you decide to call me for a free consultation, which you can do. My number is 708-794-6849, or you can get a free consultation via email, get a quote. But if you have your own agent or someone in mind, then what I would suggest, hey Cheryl, I do see the comments now. All right. So anyway, as I geek out a little bit there. So yes, the tips that I would suggest, or the question that I would suggest that you ask your insurance agent, if you currently have insurance, or someone else that you want to go to, is one, does it have, what kind of riders am I allowed to get with this term insurance? I can't afford what I really want is the Cadillac, or I can't, like I said, the home analogy. I can't afford to buy a home right now, but I still need a place to stay. I still need some type of insurance, essentially. Ask them, do they have the three main riders, which is one, accelerated death benefit, If you become terminally ill for any particular reason, and your life expectancy has been shortened considerably due to some type of health concerns, and your doctor has stated that, then there's a rider called accelerated death benefit, and it'll give you a large amount of your death benefit while you're still alive. Of course, that does subtract from your death benefit, but it leaves, they by law can only give you a certain amount, so it leaves a certain amount so that your family can still have a homegoing service for you, and the repast, and the headstone and things of that nature. But you also get to take advantage of that money, like 75-80% while you're still alive. But you do have to prove that. And you do have to ask for that rider to be added onto your policy at the time of purchase of your policy. And it does cause all of these costs, but you get what you pay for, and there's great benefits included in these costs. The second one is a disability rider, meaning if I become disabled, you did not know that. Well, that's why I'm doing these videos. Quite nervous, did a little bit, easier, smoother last time when, of course, I was talking about me, but that's okay. I'm going to keep doing it, and I appreciate your interaction. I don't feel like I'm just talking to myself. So, even though I know people will watch the video later, it's just kind of peculiar or just weird right now. So, I'm going to keep going, though. Disability rider. What that means is if for any reason you become disabled due to health or accident or, whatever reasons prevent you from being able to work at your normal location or the normal amount of times. Normal amount of times. You feel more pain. I gotta watch your video. I promise you I will. I didn't get a chance to catch you early, but I promise you I will. Support. We grow together. But yes, it gets easier. So disability rider. If you are deemed to be disabled for at least 6 months and you have decided to take advantage of this rider, again, at the time that you start your policy, then your premiums can be paid or waived, actually is what it is. Your premiums are waived as long as you're disabled. Again, it's usually 6 months to a year that you have to be declared to be disabled by your physician. But if you have that policy, that's great to know that, wow, I've been paying on this policy for 20 years, it's term, and there's only 10 years left. And now all of a sudden I can't work for whatever reason, health or accident, car accident or something like that. And now my policy is going to lapse and all my money is gone. Note, if you do get a return on premium policy rider, which I mentioned earlier, if you cancel that policy before the term that you agreed upon, you don't get any money back. Very few companies will actually give you a percentage of what you've paid in, but most of them don't want to give you anything on return because you agreed to pay them for a certain amount of time, and they agreed to give you all your monies back once that certain amount of time is over. So that's disability, and a little side note about return of premium. And then the last very popular rider is accidental death and dismemberment. If for any reason your untimely death is 100% due to accident, not you had a heart attack while you were driving and that caused you to have an accident, and then therefore as a result of the accident in your car you died. No, that's actually the cause of death was natural causes, so your family would not receive accidental pay. But if it is truly an accident and they can prove that your death was due to an accident, a lot of times they give you 2 times, even 3 times your death benefit. 3 times is usually if you're flying, on a plane, but you have to be a paying passenger, not a pilot. They have other types of policies for pilots. But yeah, if you die and it's an accident and you have that rider, if you die in an accident, if your death is due to an accident and you have that rider attached, and of course there's an additional premium charge added on, then your family would get 2 or 3 times this accidental death and dismemberment, and you would have to be dismembered, like 2 major, hey, thank you for the heart, Karam, 2 major limbs, so arm and leg, or 2 arms and 2 legs, or both eyeballs, eyesight in both eyes, I guess I should say. Alright, so this is a lot of information. I will say that I have jotted down some lists, and now some items on my list, and now I'm going to my second page. The 4th question that I posted up was, how much life insurance do I need? Well, that actually is a case-by-case basis. Are you looking just for burial? So like a lot of seniors don't have insurance, and they do know that they're closer to death than a vibrant life when they were younger. And so insurance companies will only give them burial insurance. It's called final expense policies. And so it's usually no more than 10,000. Sometimes it's no more than 2,000, depending on your age and what type of health concerns. Because I do have policies for insulin dependent diabetic, or even like guaranteed insurable. So it doesn't matter your age, but you only get like 2,000, 10 to 10,000. But yeah, so that all depends. The question is, how much life insurance do I need? That depends on what your purpose is. If it's just for burial, then you only need, burials are usually funerals are usually about 10, maybe 15,000, depending on how extravagant you want to get. So I would say 10 to 15,000 if that's all you're concerned with right now. Another point that you need to pay attention to when you're deciding on how much life insurance to get is, do you have dependents? And if you do have dependents and you die untimely, do you want to make sure that their future is still taken care of? Do you want to make sure that their standard of living doesn't change at your just because you've passed, which is definitely unfortunate for children and a spouse, but they need to pay that mortgage. If you want your children to go to college, and you need to have enough money for them to go to college, enough money to take care of that mortgage, because now one income is gone. Can your spouse continue to maintain your standard living with just their income, and save, and provide for your kids some of their wants, most of their needs, all of their needs and some of their wants, and then put them through college. And then even after college, the kids still need some type of assistance, that's something that needs to be decided upon. And are you trying to pass on generational wealth as well? Now, you'd be surprised. I did a little bit of research because I want to make sure that I listed off as many companies as possible. But JCPenney, Pampered Chef, Stratford University, and McDonald's all started via life insurance policy. So again, passing on generational wealth. Do I want to just leave enough money for my loved ones and my family members to put me away in a decent manner, in a respectable manner, which actually is important to a lot of people, which is only about 10 to 15,000, or do I want to make sure that my kids are also financially secure? Don't have to worry about money on top of having to worry about the dealing with your loved one passing, grieving, and all of that. So, like I said, JCPenney, and you can look it up and do some research on it. I'll even post a link on my Facebook page. JCPenney, Pampered Chef, Stratford University, and McDonald's, just to name a few, all started from insurance policies. And one way or another, I gotta run Stacey good stuff. I need insurance help. I'm gonna ask you later. Good job. Well, you're my friend on a lot of pages, and we instant direct message each other, so that's fine. Bye. Thank you for watching. Also, I saw that, did you know that Master P, those of you who know who Master P is, a self-made millionaire, I guess you would call him, a mogul in the music and entertainment industry, he actually built his $250 million business or company or brand off of a $10,000 life insurance policy that he received. Yeah, can you imagine that? If you do the right things, which is why, I focus on changing our money mindset and making better decisions monthly with our finances and preparing for the future and investing. He did the right thing, made some good choices, educated himself, or somebody in his circle educated him, and he was able to build a $250 million empire off of a $10,000 life insurance policy. So that's what I mean when it comes down to the question of how much life insurance do I want to get. What is your purpose? Do you want to have generational wealth? Is it just for burial for yourself? Do you want to make sure that your loved ones don't have the debt that you have passed on to them? Do you want to make sure that they maintain their standard living so they don't have to leave the home, leave the school, leave the neighborhood, uproot your whole entire family because now they're having to depend only on one income? So those are pretty much the basics on what you determines, or what should determine how much life insurance you you deem necessary for yourself right now. So just to recap, the 4 questions that I answered was: 1, what types of life insurance are there? And we discussed that there's whole life and there's term, which is whole life is permanent, and term insurance, of course, obviously is temporary, hence the name term. How does life insurance work? Today I talked about term insurance and went into detail what's the common uses and some pros and some cons. And next week, stay tuned, September 14th, roughly 7:30 p.m. It's a Thursday, because this is Life Insurance Awareness Month. I will be talking about whole life policies or permanent policies. Let's see, I have another comment. I'm almost 50 years and I need help on insurance. Yes, as I mentioned earlier, life insurance premiums do increase every year that you get older, and it also increases with any health concerns that you may have. Go ahead and inbox me, and we will be able to do a free consultation, find out what your insurance desires are, what you're needing it for, what is your purpose. Is it just for burial, as I just mentioned, or is it for generational wealth to be passed on to your children? And if you want your debt to not be passed on. Hey Sharice, thanks for chiming in. If you don't want your debt to be passed on to your children or your significant other at that time. So again, I was just recapping. The 4 points that I touched on today was what type of life insurances are available: whole life, which is permanent, and term, different types of each. Today I went to grave detail with term insurance, and next week, September 14th, I'll go into detail with permanent insurance and the different types. I also answered the question, how does life insurance work? I gave you some examples. Again, the best example that I like, hey there, the best example that I like, and it actually drives the concept home to a lot of people, is you can relate it to renting a home. Term insurance is like renting a home. You can rent the same home or the same apartment for 30 years, and if you stop paying that rent each month, they're going to make you vacate the premises. You don't own that property, you don't own that land, and it doesn't matter how much and how long you've invested, that's not your home, and you have to leave, and you don't get any of your money back. That's the pretty much the situation with term insurance, unless you have some of those additional riders that I mentioned: return on premium and convertibility. But with whole life and permanent insurance, you actually, this is your home, and it comes with a lot of different benefits. I can take some equity out of my home. I can, if you have a rider that's, disability and accelerated death benefits, and some of those riders do come with term as well, but, they are, some are included with whole life. With term, you have to actually add each one of them most of the time and pay additional premium every term. Every policy rider you add on adds additional costs. But it's kind of up to you. You do have some options here. I'm glad I was able to educate you. Let's see. The next question is, when is a good time to buy? So I mentioned that, with the key employee policy, the buy-sell agreement, when you have a mortgage and, you know that this mortgage is only going to last for, say, 30 years, but you want to make sure if I were to pass on within those 30 years, my significant other and my family members, my children, don't have to worry about trying to make that mortgage and trying to maintain their standard daily living off of that one income. They don't have to be uprooted. They don't have to leave their home, leave their neighborhood, leave their schools. They're already dealing with the mourning of your death. I thank God, like whole life. All right, Mr. Fabian. I did mention that, because of HIPAA, I definitely can't discuss any of the details with you, what we can do for you, but I definitely have policies and some options for you. And since you are soon to be turning 50, I will definitely make that something serious, one on a top of my priority list, to make sure you get that taken care of. And I can answer all the questions that you need. If you have some general questions for me, go ahead and send them now, because I'm available and I'm paying attention to you. I like the fact that you are reaching out. Lost my train of thought though. Let's see. So I was talking about when is a good time to buy term insurance. So the mortgage, buy-sell agreements, key employee, and if you only have moderate income. But I did give you the tips on, if you are going to buy term insurance, make sure you ask about the 3 most used or highly used riders, which is the accelerated death benefit, accidental death and dismemberment, and also disability for 6 months or more. Convertibility, as I mentioned, if you can get a term now, because that's all that your money can allow you, then you get a policy and then convert it over later, and you don't have to prove insurability, and you also don't have to worry about, now I don't have insurance and the premium is going to hike up significantly because you had that agreement, but you have to do that at the time of purchase. So let's see, the last question I asked was how much life insurance do you need? And I told you that all depends on what you're looking for. I told you that, make sure you look into, and I'm going to go ahead and post that link on the different, some major brands that started off with a simple life insurance policy. JCPenney, Pampered Chef, Stratford University, and even McDonald's, just to name a few, all started from a life insurance policy. So let's see, unless you guys have any other questions or concerns, I think, oh, you know what? There is one more final thought that I did want to mention, and that's you can actually have the ability to combine term and whole life. Some people, a lot of older people did this before some of the newer whole life policies came out, but it is a way to save money and still be protected now and protected later, and don't have to worry about just because I'm getting older and new health concerns, eventually I might have to get a new policy. You can get a small whole life policy, so therefore it'll last until the entire, the end of your life. And nowadays most policies are going to 120 because we are living longer, 120 years old. Imagine that. 110 years, 120 years, either or. But you can get a small whole life policy, so it is building cash value, and you don't have to worry about it running out and you're still alive, and now I'm trying to get new policies though I'm older and have health concerns. But then you can get a term policy attached to it as a rider. So I have small children and I want them to go to college, and I do have a mortgage on my home, so later on I need to make sure for the next 30 years that if I die, not only do they have burial insurance for me, but all of these additional extra expenses are taken care of and they're not in a financial bind. So you can get a whole life policy that goes to death, and then you can get a term rider attached to it, which is only, say, for the next 30 years, I have an extra $200,000 that covers college, covers activities of daily living. My standard of living is okay, and it also covers mortgage, and it also replaces your income, so there's no additional worries. So that's a great way to kind of combine the two. I don't have to worry about all these additional riders and such. That's not as inexpensive as term, but it is definitely an option, and that's why I'm here, is to explain, different options, give you something to think about, something to ask your insurance agent about before purchasing a policy, or to tell anyone you know who doesn't currently have a policy or does have a policy but is not aware of the different options that are available out there. A lot of people just think it's term and whole life. There's so much more to it, and you can have multiple policies as well. So the last thing I wanted to mention is, again, if you want to know more, you have questions that you didn't want to share on here, or if you missed it live and you're watching a replay of the video, hey to you too. Sorry you missed it, but that's okay. I understand life happens. I'm still going to be here, and I'm going to continue. This is Life Insurance Awareness Month, September. So next Thursday, September 14th, I will be talking in more detail on permanent insurance, whole life, universal life, index universal life, and the fact that you can use it as an investment vehicle. You can use it for retirement. You can use it to pull cash out, and later on, as long as you have it in the policy for at least 10 years, you can pull that money out and buy you a home. You can pull it out and pay for college. You can pull it out and start your new business. There is no tax penalties. You don't have to be a certain age. A lot of different benefits. You can gain interest as far as you can put it in a stock market depending on the policy. That's an index life, and you can gain up to 15% interest rate. That's not all the time, but I mean it can reach that point, or you can stay with something that's a little more stable, a little more guaranteed at about 5.6%, 5.7%. But again, that's just a little tidbit just to pique your interest, and stay tuned for next Thursday when I'll be returning. And then I have a surprise for you. I'm going to do a little collaboration with somebody that's really known in the area that I'm in. And she's going to talk about how you can increase your side income by becoming an insurance agent as well. How about owning your own time and still earning like $800 to $1,000 a month? That's awesome, right? You know, a lot of people just do it as a supplemental income. Some people do it full time, but you know, if I could work 2, 3, 4, 5 hours a week and get $800 to $1,000 a month, I mean, we all could use that extra $800 to $1,000 a month. And you work when you want to, and when you don't want to, you don't have to. You're not punching the clock, and you're not tied to anybody. So your insurance license is yours to keep. But again, that's what she's going to talk about on the 21st. We're going to be talking together. She has another spin on things, and I've learned a lot from her. Her name is Sharice Price, and I look forward to collaborating with her 7:30 September 21st. But that's so far in advance. I will be reminding you. Again, my name is Stacey Daniel. I am a personal finance coach, and the people that I deal with primarily is anybody who's trying to build a emergency fund, all the way to someone who's trying to set up their retirement options, or they've already retired and they want to see what new options they have, and anybody in between. My objective is to change your mental mindset so we can be on our road to financial freedom, and that means so much different. That means it has different meaning to so many different people what financial freedom means, but essentially when you don't have to worry about your finances, you can start to walk in your purpose, and walking in your purpose brings you joy. And that's my goal, so people can be as happy as possible doing what it is they love, exploring their gifts, their spiritual gifts, and the things that they are very good at, and it just comes natural. So I don't see any more comments or suggestions. If anybody have any comments or suggestions, let me know.